Hi everyone. Great to see people joining this webinar this morning, and welcome to uh, EVORA and CREFC Europe's webinar on the IDP lending template. And we're going to talk you through that, talk you through about the due diligence. My name is Paul Sutcliffe. I am the MD of Special Practice Group, which is the consulting part of EVORA Global. And I'm joined by Sam Carson from CBRE and Zoe Lamb from Barclays, and we are all members of CREFC Europe's Sustainable Finance Forum. And we have worked on and we've been involved in looking at the IDP's lending template and considering this template and how it can be used in Europe. So I'm going to do a bit of an introduction then about the IDP template. Um, and then I'll hand on to Sam, who will provide a bit more information about CREFC Europe's additional report about this process. And then we'll pass on to Zoe, who will be able to sort of provide some insights from her perspective on lending due diligence, collecting information from borrowers and sponsors. There isn't the option to raise questions in the Zoom call using the question or the chat function. So please do use that. We'll monitor that and we'll go through there'll be time for questions at the end. The session's designed to run as a short, punchy session. It's about 30 minutes today, so we're not going to take a huge amount of time. We just want to give you some insight into the scheme and into why it's been developed, why the tool has been developed, where you can access it from, and how you can benefit from it. So IDP developed a template to support due diligence lending in the early part of 2026, so this year, and it was to address one of the key problems and challenges that we all face, that I think a lot of people on this call will sort of recognise and face, and that is there's a bit of template fatigue. So lots of different lenders use lots of different templates, different questions are asked along the same topics. So typically looking at energy, water, waste, carbon, etc., but along the same topics. But there is fragmentation. And so it's hard to compare data from an underwriting perspective. It's hard from a borrower's perspective or a sponsor's perspective to respond to lots of different questions. So there was a view that consolidation and a standardization as much as possible would help the market. And the IDP Integrated Disclosure Project got together and looked at this as an option. And this was built as an industry-led tool. It took a while to develop, and that was because contributors and consultation was involved in that process. So key organisations that were involved in pulling this together included KKR, Apollo, and others, and consultation involved reaching out to both GRESB and CREFC Europe as well to get our feedback on that process. And the design principles of the tool are that it builds on existing frameworks, particularly INREV and MISMO in the US and GRESB. So rather than creating a completely different framework and a completely different structure, it asks similar questions and aligns with existing frameworks as much as is possible. It's globally applicable and has a risk and downside lens. And an important factor that I want to highlight from the start is that this tool has been developed and focuses on lending for standing assets for existing buildings. So it looks at collecting data for that asset, that period in an asset's life cycle. The design is that it creates the concept is that this will create a common baseline in the use of its tool. It will hopefully, and the intention is very much that it reduces response fatigue and also analysis fatigue for on both sides, so from a borrower perspective and from a lender perspective, and drives consistency in the information that we need to supply to the market. It's now freely available to download on the IDP's website. You can see on the screen that I share with you now. I've highlighted, if you log onto the website, There is a download real estate lending template option there. I've helpfully identified it with a big red arrow. That's not on the website, but that's my indication of where it is. Um, we will obviously share that information to attendees after the call so they can access it, but that's where it can be found. I'm going to pass on to Sam now to provide a bit of an introduction to the CREFC Europe report and provide some insight into where that came from, how that was developed, and so on. So, Sam, over to you.
Fantastic. Thank you very much, Paul. Really appreciate it. And thank you for hosting this. So this report from CREFC, which aligns with the IDP template, um, comes from we were already developing this report before the IDP engagement happened, because we'd identified the fact that there was maybe less consistency than we wanted across the lender space in collecting similar data. So we were seeing. So I sit in the valuations team at CBRE, and we were seeing different lenders approach the challenge of sustainability in their due diligence in different ways, and that was leading to less of alignment and confusing borrowers, perhaps, but also not providing consistency in the analysis that was coming through. So for us, when we were talking about this, both in the context of the report we were writing, but also in how we were going to support the market, we really wanted to see that consistency. So when we saw the IDP project happen, we instantly knew that we wanted to tie ourselves to that because that just provides more consistency. It's global. It's being used. It can be then used by everyone, and we don't have sort of a mixture of different approaches to this, which clearly we need to avoid. We need to stop making new stuff, and we need to just hammer in common consistency throughout. And one of the reasons why we need to do that, and we've seen this in the equities space. I think you mentioned some of the other equities frameworks. And what that has meant is that, asset owners have been able to collaborate on what this data can tell us and use that in order to improve their analysis. That collaboration helps improve the quality of information that we get from this data recovery because we're not just interested in collecting data, we want to make that data mean something. So that it made sense just to pile onto the IDP process. But we wanted to make more out of what you can do with that data. And so that's why we wrote this report and continue to write the report that we were already writing. And the other issue that we've seen in the market is that so you start to collect data, what do you do with this? And imagine you just started at maxing out on whatever data that you could collect, but you don't know what to do with it. You just end up overloaded with numbers or information that you don't necessarily know how to use. So the CREFC report, based on the IDP template, provides these maturity pathways, and so it sort of says what you should recover, why at a different maturity level. So we start at foundational. You're just getting started. You're learning how to spell ESG or whatever, and what you want to do is just collect the basics and make sure that you're using it properly and using it properly, and it matters and it's useful and it can be integrated into your systems. And really, you do need to start there. But when you start there, what happens is you collect this data, you have this information, you start to use it, and then questions arise, and that moves you to the next stage of this maturity journey, where you go from foundational to analytical. And that analytical is where you develop more information from the data you collect. You start making decisions, that those decisions start to matter, and you know what you're doing with this information, having followed that maturity pathway. And finally, you've done that so well that you're starting to really use that data from a strategic basis, right? You're starting to think about how that projects into the future. And that's the next stage, the maturity pathway, where you're starting to develop maybe data that reaches beyond the basics and then the common information and think about how that can project into decision making over the long term. And you can try and go straight to strategic, but unless you've got the foundational and analytical processes in place, you're just going to be awash with questions and not answers. And so we really think that mapping that through is really important. So We've written out in this report, which I hope people use and provide feedback on as well. That's super important. But there are three maturity pathways. So we first look at energy efficiency and transition risks. No surprise there. We start with EPCs and ramp up into a full transition risk analysis. We also look at physical climate risks as well, which obviously makes sense from a lending perspective, trying to protect against risks to refinance, and governance and strategy. And within that governance strategy, we're also talking about disclosure and reporting, things like financed emissions and all the other things that you might need to do for your disclosures and reporting aspects. So it goes from hygiene to strategic in each of these cases. And what does that help lenders do? Well, this report is a user guide basically for the IDP template. And I think that that's just going to be really helpful for anybody who's saying, what's this spreadsheet and how do I use it? So from a basics perspective, I think that that should be useful. But it also explains how we can build all of the different analyses. And it's not long, you're not getting a full how-to guide, but you're certainly getting the principles that you're looking for from the data that helps you move from one stage to the next. Why do these things matter? Written from a pretty pragmatic point of view. Um, and then what that then allows is, as I said before, if we all use this sort of similar process, that we can collaborate, we can share common approaches, we can share our learnings, we can collectively improve our practices. And I think that's really important. We've seen that actually quite effective in the equity space over the past 20 years. And our report, unlike the IDP template, is focused on Europe. But there's no reason why it doesn't work on anywhere in the world. It's just that we narrowed it into that space. But the IDP template itself, being global, has the substitutions within it. So you can quite easily say, in outside of Europe, I'll swap EPCs for Energy Star in the US, and we can use similar maturity curves from there. So I hope that that makes sense. The final thing before we move on is the IDP template is a spreadsheet. I mean, of course it is. Why? What else would we do in sustainability other than make a spreadsheet? But what is, I think, really important, having been a part of this process, is that we don't focus on the spreadsheet. We focus on the data points and how those data points can integrate into our processes. So I would recommend you think about whether or not that spreadsheet's useful, or whether or not you can take that spreadsheet, wrap it into your own tool sets. But make sure you use those data points because they're the things that align across the market. I hope that makes sense.
Yeah, thanks, Sam. I think the key one of the key messages is that these are really valuable resources for you to use to identify, to help evaluate where you are. We talk about foundational, analytical, and strategic positioning and considering that. And it gives people sources of information, both the IDP template but also the CREFC report together give people information, or organisations information, that they can use to, if they've already got existing processes, review and refine their existing processes, just to look at how things can be standardised as much as possible. So that was really helpful.
Exactly.
We'll come back onto questions, but I'd like to invite Zoe to just contribute with a few thoughts and views from your perspective, Zoe.
Yeah, thanks, Paul. So, I mean, I'm probably just building really on what Sam was saying quite a lot. I think the thing for me is that I don't really view this just as like another questionnaire, another reason to ask for data. And in a competitive lending environment, requests of borrowers puts you at a disadvantage, let's be honest, right? You want frictionless transactions, but at the same time, it's in everyone's best interest to be collecting this data and information and understanding the true risk of any lend. And so I think having this kind of North Star across the market means that we're working on an even playing field a bit. And it also means for sort of syndicated transactions, if everyone works off a similar playing field, then it makes it much easier and reduces that friction. And it allows a much easier way of comparing asset by asset, deal by deals. And so you're not duplicating the process. Like, the question banks that you get. In the same way, for me, this questionnaire represents the sort of equivalent of having a set of definitions for covenants, right? It's the same thing. You wouldn't go into a deal expecting to start from scratch every single time you wanted to do covenant definitions. There are standard practices, LMA guidance on all of these things. And yes, there's tweaks, there's always tweaks to every deal, but it does create a starting point. And the other thing that's really important is the pathway. So that acknowledgement that not every borrower is the same. Some people are just sort of starting off the blocks, but that shouldn't put them in a disadvantage from transacting. It should just mean that they need a bit more help, a bit more guidance into how do they get going to make sure that they are expanding their market as best possible so they can get the best deal that they've got. I think the practicalities of it across UK and Europe and global as well make it really helpful, because again, it gives an indicator to the market of what we're looking for in this industry. And I mean, ultimately, for me, I'm seeing sustainability and ESG really embedded into operations, embedded into transactions. It's not an add-on. It's not just a nice to have, but it actually creates a credit lens. And this provides the information for that credit assessment that I think is proportionate, but it's also just sort of useful for all borrowers and all lenders. And that, to me, creates for a better market.
Absolutely.
Yeah, thank you, Zoe. Yeah, Sam, I've had a question. One of the questions I've got is how did the development of the CREFC Europe report come about? How was it? Did you just write it, or how did it come about?
Well, so in the Sustainable Finance Forum, we identified actually in one of our first meetings how the nature of all of this data. It was sort of like an ESG data whack-a-mole session, and so borrowers didn't know what to expect when they were being engaged, and lenders, I don't think were necessarily scaling the use of the information and the collaboration that can come from common data points. And I also think that at the time, this notion of maturity pathways, I think what that helps people do is not be afraid of getting started. It makes it accessible, but then also explains why you want to be better at this, and what you get from it. And so that came out of the Sustainable Finance Forum, and that and at the same time, I was working with the RICS on the professional standard, the ESG and sustainability in commercial property valuations, fourth edition. I did it. Getting that title right isn't a given.
Yeah.
And so the opportunity was there to align both the IDP but also the RICS professional standards, so that this was spreading across the market. And because it was already aligned to the INREV and the other templates in the market, like, we're not making anything new here. All we're doing is drawing it together and saying this is the thing you want to do, and then our report could then say, and this is an easy way to use it, satisfying sort of the challenges highlighted in the finance forum, and working with the finance forum to make sure that the process was robust and useful and practical. And so I'm really proud of this, actually, because I think we've cut down on the number of the information required, the uncertainty of this information, and what we've been able to do is provide something that means that we can use this information properly, integrate it, and get the benefits of it, as Zoe said.
I think that sort of desire for standardization is definitely something that comes up every single time I talk to clients. That's the thing. They want to not have to sort of produce a load of information for a lot of different people, which they're already having to do just as they asset manage, even across sort of sustainability teams, to asset management to finance. So again, if the more that everyone can sort of align to this minimum requirements sort of piece, especially, then it just like helps every player in the market, which I think is just the power of that collective action could be really, really great.
And another side benefit is if you're a borrower and you get asked 50 questions, your limited resource period that you collect that information will be spread across those 50 questions. If you ask 5, you'll get higher quality responses every single time. So what I think is really important is that a lender asks a question, it doesn't get answered. They go back and no, we need this, and we know why we need this. And so that just makes the whole thing better.
Yeah, not having data for data's sake, but actually
Yeah.
because the understanding of the why I think is really important.
Yeah. Okay, I've got another question, and this is from a non-bank lender perspective. So there's recognition for standardization. The points about standardization are recognized, and the challenges for borrowers to respond are very significant. But from a non-bank lender's perspective, many debt funds raise money using SFDR as a framework, Sustainable Finance Disclosure Regulations, and need to define their own Article 8 or potentially even Article 9 characteristics or sustainable investment objectives. And by definition, they want to be different. They want to be slightly different rather than to demonstrate variance from the rest of the market to attract and investors, LP investors. Do you see any place for the IDB tool and the CREFC Europe report on this in supporting SFDR? Any comments or views on that side of thing?
Absolutely.
Right.
But it's going to come in the use of the data, not asking more questions. I think how you build your analysis, your risk analysis, how you build and articulate the value, how you go from foundational to strategic in a clear and articulate way will just make sense, right? So if and I'm thinking about the physical climate risk perspective, if you're going straight to TCFD style uh, analysis straight off the bat, you'll be overwhelmed with that information and maybe unable to actually interpret what that uses. But if you build up from the foundation all the way into that sort of detailed analysis, then you know why that question is being answered. You know why you need this information. You know what the decision is that comes off the back of it and why that's compelling. And that is so useful when you're talking to investors about what you're trying to do from here. Just going in and saying we're collecting data, I don't think is good enough. Understanding how you're using this to make strategic decisions and create resilience within your portfolio is absolutely the name of the game.
Thank you, Sam. I agree as well. I think from my perspective, I see alignment and how it can be really helpful from a perspective of funds will need to set their characteristics and objectives, and those characteristics or objectives will need to be underpinned by data. And if they know there's a standardized way of collecting that data, they then feed into their analysis, then that makes absolute sense here. So I do not see this as being a competitor for any of those schemes. Absolutely not. It should help in the standardization of the collection of the data that then underpins any characteristics or commitments that are made.
Yeah, for
Okay.
sure.
Another further question is I mentioned at the start of this discussion that the tool was focused on standing investments. What about developments? And what about lending portfolios that lend to both developments and operational or standing investments? Any views on how this can be used, how it can be worked, or comments on that point?
Well, from my perspective, there's two sides to this. One is developments are such a what I mean, from a valuation perspective, we look at developments probably a bit more specialist way than we would a standing investment because they are inherently unique, right? And there's so many moving parts, particularly from a sustainability perspective. But on the other hand, this results in a building, and the building that results in will collect this data. So clearly, the design intent that sits behind each of this data will help you understand how to neutralize risks into the future. So I don't think it changes very much at all, but I don't think that you should stop here. I think you should continue to ask questions about what that development is going to look like.
Yeah, I think one of the points I would raise is that it can be helpful in terms of for developments in terms of phrasing what information will be needed when the asset is operational. So thinking about it ahead of the game and understanding what's being asked for and what's likely to be asked for, it can help inform the development of plans in the development phase. And then also it depends on over what period you're lending for. So assets may be developed and become operational during that phase, and in which case it could be they could be used as well. Absolutely.
I think that's sorry, I was just going to jump in. I think that's really helpful. It's really true, right? Because the nature of the questions, the nature of what a lender's interested in, points a little bit to design decisions that you're making through the development process. So the questions about energy efficiency, sort of what the capex plans are. If you know that that's going to be assessed in the next stage of that building's life cycle, you can prep for that at the front end because you know that's going to be taken into consideration for funding appetite going forward. So I think it's useful to help sort of nudge that future consideration piece. And as Sam said, I think you have the market standardization, but it really comes down to the individual institutions as to how you embed and how you use. So for us, there was a lot of sort of common themes of things that we were already taking into our credit assessment. If I can use the spreadsheet and put it in the back of a credit application, that's just going to make my credit team's life easier. If my credit team's life easier, I can lend more money. Let's be honest, we're all humans.
Perfect. And what a good place to end, Zoe, as well. Thank you very much. So I just to close out, first of all, thank Sam, Zoe, thank you very much for participating. I'm going to leave with these headlines. The key messages are that both the IDP template and the CREFC Europe report are industry driven. They're globally applicable with a focus from a Europe perspective on the from the CREFC Europe report, aligned to frameworks where possible. The whole principle, guys, is to reduce burden. It's to reduce the time needed to collect and disclose data, and also, as Sam said, one of the reasons why CREFC Europe didn't produce its own individual report to just add to more or individual template to add to more the existing templates. So it reduces burden, as Sam has said, creates a flexible starting point, especially when you're looking at the foundational, analytical, or strategic bases that the CREFC Europe report has produced. Standing asset focus, but now can be used to help inform development plans and so on. And very importantly, now live and downloadable from websites. So they're the headlines. Thank you very much for listening. We're at the half hour. Thank you again, Sam and Zoe, for contributing. This recording will be made available. It will be made available on CREFC Europe's website. So yeah, if you do have any questions, please don't hesitate to reach out to any of the panelists on this call or the CREFC Europe Sustainable Finance Forum. Thank you very much, everyone.
Thank you.